Do you have questions about private mortgage lending in Ontario? So do many people, as it isn't as familiar as bank lending for most Canadians. Mortgages from private lenders share some similarities with bank mortgages, but also have some differences. Every day, people contact our company to clarify some of these differences. Hello everyone. This is another video from Mortgage Broker Store. In this edition, we will answer some of the most common questions people ask about this alternative mortgage option. Like who private lenders are, the big reasons to choose one, how they work and others. Let's start at the beginning by answering one of the most common questions we get asked. What are private mortgage lenders? A private lender can also be called an alternative lender. They might be the sole proprietor or small business that works apart from trust companies, credit unions, banks, and other federally and provincially regulated mortgage lenders. Even though they don't follow some federally enforced standards, private lenders are regulated under the Ontario Mortgages Act. Some people want money or a mortgage when they don't qualify for a traditional bank loan. Those people are interested in the answer to our next common question, which is: how do private mortgage lenders work? These types of loans are easier to qualify for. For example, in many cases a private lender will approve an application when there's more than 25% in home equity available in an urban home. It is a little higher for rural or commercial properties at around 35%. These private lenders focus on existing debts, the market value, and the loan-to-value (LTV) ratio. The LTV is calculated by dividing the total of the requested and existing mortgages by the value of the house. Many private lenders won't work with residential properties with an LTV of over 75%. When people start to learn more about what these lenders do, they are naturally interested in the reasons to choose a private mortgage. Some of the big ones include reasonable requirements like paying for home renovations or repairs. Private loans have also been used to stop foreclosures and power of sales and to cover day-to-day expenses after a work layoff. So, it's understandable the next common question that people ask us are: who can private lenders help? These loans are helpful to a variety of people, including those with a low credit score. Other people who benefit are facing a sudden emergency expense like automotive repairs. Private lenders can often supply the money quicker than the banks. Interested in learning more? You're not alone, and that's why the next section is called 3 Types of Lenders Explained. The banks and larger institutions are called A-lenders. They have strict criteria for mortgage loans and require near-perfect credit scores plus a preference to full-time salaried employment. Credit unions and trust companies fall under the B-lenders category. They have some wiggle room when it comes to credit scores compared to the A-lenders, but they still require solid credit ratings and consistent income. B-lenders, unlike A-lenders, will usually accept self-employment income. That brings us to private lenders in the C-lenders category. Whether they are individuals or a group of lenders, they don't focus as much on credit. Private lenders rely on the location of the property and current appraisals. They also focus on the loan-to-value (LTV) ratio, which is equal to the total value of all mortgages divided by the property value. Once people have all this information, it follows naturally that they ask the next common question, which is: how long does it take to get a private mortgage? These C-lenders can approve a loan quickly. All they need is an estimate of your existing equity, a list of your monthly income and current assets, as well as an appraisal of your home. Typically, a private loan can be approved in between 1 to 5 days and finalized within 2 to 3 weeks. Naturally, people want to know about these private lenders' credibility, so they ask: who regulates private mortgage lenders? Private lenders are not subject to the same regulations as larger institutions like banks. However, they do have their own requirements. The Ontario Mortgages Act sets out laws for all lending in the province of Ontario. Private lenders must adhere to these laws. Additionally, private lenders must either work with a regulated mortgage broker or be a mortgage broker or agent themselves. The regulatory body for mortgage agents and brokers is called the Financial Services Regulatory Authority of Ontario, usually referred to as FSRA. We get a lot of clients asking the next logical question, which is: what are the interest rates and fees involved? People with poor credit pay a slightly higher interest rate through private lenders. Those rates are usually somewhere between 7% to 12%. The lender and broker fees are also generally higher than other lending institutions at between 3% to 6% of the entire cost of a loan. Of course, it's also important to understand how to calculate payments for a private loan. We'll tackle that next. When you get a mortgage loan, you'll have one number that is called the principal and another called interest. The majority of bank and B lenders will ensure that part of each payment goes to pay down the principal balance of the mortgage. The majority of private lenders will only charge for interest, meaning that the principal is never reduced. Most private lenders expect to be fully repaid when the property is sold or the homeowner gets a new mortgage. With private mortgages, you can use a simple interest calculation to determine your monthly payments. On a $100,000 mortgage at 12%, you'll pay $12,000 a year. Since there are 12 months in a year, the monthly payment would be $1,000 per month. To get the lowest interest rate with a private lender, you'll need to have a low LTV ratio. LTVs of less than 50% in urban areas will allow you to get the lowest rates with most private lenders. The last question we get asked quite often is the one that can get you started with a private lender. How do I find a private mortgage lender? Most private lenders either work through mortgage brokers or advertise directly to consumers. There are many TV, radio, print, and online ads for these lenders that offer private mortgage loans. Any direct private lender that advertises should also have their FSRA mortgage broker license number in the ad. Since there are so many private lenders, it is important to research the best ones or ask a broker to help compare the different lenders. Mortgage Broker Store works with a network of private lenders throughout Ontario and across the GTA. Why not get in touch with us so we can help you find the best mortgage solution? Just click on the second link in the description to book a call with our experts. Thanks for watching. Don't forget to like this video and please subscribe to our YouTube channel.